Diving into the world of real estate investments is a savvy move to broaden your financial horizons and add some much-needed diversity to your portfolio. But, let's face it, not everyone's keen on the idea of becoming a property magnate, dealing with endless renovations, or playing landlord to tenants. If you're in search of alternative avenues for real estate investment that promise equally lucrative returns, you're in the right place. We've got 5 game-changing strategies that will help you cash in without ever owning a single piece of property. 1. Invest in a development. When you opt to invest in development, you're essentially backing a developer's grand vision for a thriving community of homes and properties. The beauty of this approach: it grants you the opportunity to handpick a development company that aligns with your preferences and investment capacity. The best part: you won't be bogged down by the nitty-gritty details of construction or upkeep. Instead, you'll bask in the financial fruits of your equity or debt investments. These real estate companies aren't just about profit. They're pivotal players in local economies. By generating jobs and offering solutions to the ever-pressing national housing dilemma, they're making a substantial impact. Speaking of risk, many real estate investments come with a moderate level of it. However, investing in a development boasts the potential for handsome returns. As long as the development's costs stay on target and property values along with the housing market maintain stability, your investment remains comfortably low risk. You might even start dreaming of significant returns if property values surge once the development reaches completion. To be in danger of losing money, the market would have to experience a substantial downturn. Hence, choosing to invest in real estate companies specializing in property development is a reassuringly safe bet. 2. Invest in real estate investment companies. Real estate investment companies are the real MVPs of the property game. They're the ones scouting out properties that are in dire need of some TLC, orchestrating the essential renovations, and then flipping these gems into rental or real estate goldmines. But they're not just about the profit. They're problem solvers too. They step in to aid homeowners facing the woes of missed mortgage payments, foreclosure threats, and other debt-related nightmares. These companies offer a lifeline that preserves their credit while giving homes the makeover they've been yearning for, showcasing their true character and charm. In doing so, real estate investors become the unsung heroes, revitalizing neighborhoods and placing struggling homeowners into affordable abodes. Now, let's talk risk. Investing in these real estate companies follows a similar path to other real estate ventures, tethered to the ebb and flow of housing markets. The success of these companies hinges on their clients' ability to secure a home or find a mortgage with a manageable interest rate for their property purchase. But here's the twist: these companies acquire homes in well-established neighborhoods, surrounded by amenities, and often at lower price points compared to newly constructed properties. As a result, these homes tend to fly off the market, delivering returns that soar above the average, particularly when juxtaposed with investments in alternative real estate avenues. 3. Invest in REIT companies. Now, let's dive into the world of real estate investment trusts, better known as REITs. These financial powerhouses offer you a stellar alternative to traditional property investment, minus the headaches of property hunting, financing, or maintenance. So, what's the deal with REITs? They're the proud owners or financiers of income-generating real estate, spanning both residential and commercial domains. And here's where it gets exciting: they generate steady profits, which they generously share with investors through juicy dividends. When you hitch your wagon to these real estate companies, you're essentially infusing your real estate investment portfolio with a dose of passive prowess. The best part: you've got multiple avenues to make your investment, whether it's through stocks, mutual funds, or exchange-traded funds. Types of REITs. Equity rate. These heavyweights are publicly traded on national stock exchanges, making them accessible to investors like you. MREIT or mortgage REITs. These financial wizards provide the crucial initial financing for income-generating real estate projects, playing a pivotal role in the real estate ecosystem. Public non-listed REITs. While registered with the SEC, they don't make a debut on national stock exchanges, but that doesn't mean they lack potential. Private REITs. These rebels are not bound by SEC registration and keep their shares off the trading floor. Let's talk risk. Publicly traded REITs are the safer bet here. Why, you ask? Well, you've got the power of research at your fingertips, allowing you to scrutinize these companies' financial track records and stability. Plus, they boast better liquidity, meaning it's a breeze to sell your shares when the time is right. Investing in REITs is like having a backstage pass to the real estate game, with the added perk of convenience and diversity. 4. Invest in home construction companies. Picture this. The housing market is on the rise, interest rates are at their lows, and you're ready to make a smart move by investing in home construction companies. When the economy is booming and mortgages are as appealing as ever, this investment avenue can be a gold mine. But here's the deal, as the economic landscape tightens its grip and interest rates begin their ascent, the pace of home buying and construction tends to slow down. Naturally, this can put a dent in your investment returns. The catch with this investment type: it's quite reliant on the availability of building supplies, skilled contractors, and other crucial resources. If these components are in short supply, your journey to consistent returns may hit a few bumps. However, investing in home construction companies offers you a fantastic way to diversify your portfolio without shouldering the responsibilities of homeownership. You've got options here. You can snag shares of home building company ETFs or go all in by investing directly in a specific home building company. Just remember, this type of investment is tailor-made for those who can handle a bit of risk. Now, let's talk risk, shall we? Investing in home construction companies is a bit like riding a roller coaster. It's exhilarating but not for the faint of heart. If you're in it for the short haul and quick returns, be prepared for some rocky terrain. On the flip side, if you're playing the long game, the risks level out and your returns become more enticing. Ideally, you should plan to hold onto those shares for a good decade or so, allowing time for recovery from any temporary setbacks that might occur as home values bob up and down. Keep in mind that the real estate market is a wild ride, and this type of investment dances to the tune of the country's economic conditions. So, buckle up and brace yourself for the thrill. 5. Join a real estate crowdfunding opportunity. Now, let's explore an exciting frontier: real estate crowdfunding opportunities. Think of them as the modern twist to real estate investment, allowing you to dip your toes into the property market without the heavy baggage of direct property ownership. These innovative platforms let you team up with others and collectively invest in substantial residential or commercial property ventures through crowdfunding. It's like a financial potluck where everyone brings a dish of capital to the table. The beauty of this: you can enter the world of real estate companies with a more manageable chunk of capital, far less than what's required to buy property outright. The menu of options is diverse. You can choose to invest in individual projects or assemble a smorgasbord of properties, ranging from income-producing assets to budding development projects. However, keep in mind that, as these investment and crowdfunding platforms are relatively fresh on the scene, they don't come with the same level of safeguards as traditional investment methods. And while the online interfaces are user-friendly, remember that crowdfunding apps and websites might come with their fair share of associated fees. Now, let's talk about the elephant in the room: risk. Investing through online crowdfunding platforms ventures into relatively uncharted territory. With limited financial history to review, investors often find themselves navigating with a bit more uncertainty. Additionally, the assets in play here aren't as liquid, making them trickier to sell at a moment's notice. This game is for the patient and forward-thinking. If you're in it for the long haul and aren't eagerly awaiting quick returns, crowdfunding might be your jam. It's particularly well-suited for investors who can stow away their investments for the promise of a more substantial payday down the line. Real estate crowdfunding opportunities can be the secret ingredient to diversifying your investment portfolio, especially if you've got a healthy mix of equity investments already in play. And there you have it, folks. We've unraveled some extraordinary avenues to dive into the world of real estate without the burden of property ownership. From backing visionary developments to venturing into real estate investment trusts, home construction companies, and groundbreaking crowdfunding opportunities, the possibilities are endless. But wait, there's more. If you're hungry for further insights on how real estate investing can pave your path to millionaire status, don't miss out on the next video, prominently displayed on your screen. Click that link and embark on a journey towards financial prosperity through the fascinating world of real estate. Your future as a real estate maven awaits. Seize the opportunity now.